Level 1. The Spark of Discovery. It's 11 p.m. on a Tuesday, and your life is about to change because of a thumbnail. You're scrolling YouTube when you see it. A flash of luxury, a guy talking about pips, spreads, and financial freedom. You don't understand half the jargon, but you feel the hook. By 2 a.m., you haven't just watched the video, you've opened a demo account. The interface of the terminal looks like a cockpit of a spaceship. Red and green candles flickering, numbers jumping in real time. It feels like a secret world you weren't supposed to find. You hit buy on EUR/USD just to see what happens. The price ticks up. $12 profit in 4 minutes. It's fake money, but your heart is racing as if it were gold. You think, why is everyone else working a 9 to 5 when this exists? That single thought is the most expensive thing you'll ever own. You spend 3 weeks in a fever dream. Moving averages, RSI, support zones. You're inhaling information. You find a holy grail strategy on a forum with the claimed 87% win rate. You print it out. You believe it. You deposit your first real $500. This is it. You aren't a guy with a hobby anymore. You're a trader. Your first real trade is GBP/USD. You see the pattern from the screenshot. You enter. It goes red immediately. You hold, remembering the YouTube guru's words about patience. You close it 40 minutes later, down $80, unable to breathe. Your first lesson: the market doesn't care about your screenshots. Level 2. The rabbit hole of knowledge. You've burnt $300 of your initial deposit, and your solution is more. More books, more courses, more indicators. You convinced yourself that the answer is hidden in a PDF or a $97 course. You're not being greedy, you're being studious. You learn about risk to reward ratios and draw up a perfect trading plan in a Google Doc. You deposit another $300. For 4 days, you are a monk of discipline. On the 5th day, you see a setup that isn't in your plan, but it looks too perfect. You break your rules and risk 5% of the account. It vanishes in 22 minutes. You don't record that trade in your doc. The cycle of discipline, impulse, loss, regret becomes your new normal. You think it's a psychology problem. You try meditation and journals. But the truth is simpler and harsher. You're trading patterns that have no real edge. You just haven't realized that a disciplined execution of a bad system still leads to zero. You join a Discord with 4,000 people. You follow a signal leader who is right 55% of the time. You can't tell his skill from a coin flip. After 8 months, you're down $800 in total deposits. You call it learning. You're right, but you aren't learning what you think you are. Level 3. The edge of exhaustion. Around month 10, the fire dies out and is replaced by exhaustion. You're tired of chasing the secret. You stop looking for signals and start just watching. For hours, you sit in front of the charts without placing a single trade. You're observing how price behaves at certain levels. Where does it stall? Where does it explode? You build a tiny, boring framework. 2 rules. 1 specific pair. 1 time window. You backtest it manually, scrolling through years of data. It's not a Lamborghini strategy. It's a 56% win rate with a 1 to 1.5 ratio. It's unglamorous. It's a spreadsheet, not a dream. The first month, you're up 6%. You took 11 trades. 9 followed the rules. Those were the ones that made the money. The 2 gut feeling trades were losers. You realize that not trading is a harder skill than clicking the button. You close the Discord. The noise is now a distraction. Your account hits $1,800. For the first time, you don't feel like a gambler. You feel like a technician. You're less wrong than you've ever been. Level 4. The weight of scale. You've been consistent for half a year. You have losing weeks, even a 2-week drawdown that made you question your soul. But the system held. You add capital, bringing the total to $5,000. Now the math changes. A 6% month is $300, real money. A $200 loss feels like a punch to the stomach, but you don't revenge trade. That is your greatest victory. You find a small, private group of traders. No flexing, no screenshots of Ferraris, just journals and honest debates about execution. You realize that everything you consumed in your first year was performance, a product sold to level 1 dreamers. You were the customer. Now you're the operator. By month 18, you're managing $12,000. You return 7%. That's $840 from your laptop. It feels fragile. You keep waiting for the world to realize you're faking it, but the system just keeps ticking. You start looking at $100,000 not as a fantasy, but as a technical problem of liquidity and slippage. You've never planned from a position of evidence before. It feels solid. It feels like the beginning of the end of your old life. Level 5, the loneliness of expertise. You're managing $80,000 now. Some is yours, some belongs to partners who've tracked your progress for months. You've signed contracts with clear profit splits and drawdown limits. Your life has completely reorganized itself around the market's opening bell. You've stopped drinking, you sleep exactly 8 hours, and you exercise, not for wellness, but because your data shows a direct correlation between your physical state and your trade quality. You've stopped talking about trading at social events. When people ask what you do, and you try to explain liquidity sweeps or risk-adjusted returns, their eyes glaze over. They ask if it's like gambling. You just smile and say, kind of. The loneliness of expertise is a price you didn't expect to pay. You have cash reserves for 3 years of life, tucked away outside the market. The market is for growth. Your savings are for peace. You are accountable now. That weight never leaves your shoulders. Level 6, the operator. The capital has grown to nearly $500,000. You didn't get here through ads. You got here through introductions. Investors find you because someone they trust already does. You have a part-time assistant and a compliance folder that's thicker than your first trading journal. The numbers dissociated somewhere around the $150,000 mark. You don't feel $40,000 in a position anymore. You feel the percentage of overall exposure. This dissociation is a survival mechanism. If you felt the actual value of the money, you'd be too paralyzed to click the button. Your friends have stopped asking you to hang out on weeknights. You're always partially there, your mind tethered to a news event or a closing candle. You aren't unhappy, but you are aware of the cost. You've made the calculation and you've chosen to stay. Level 7, the architect. There are 7 people on your payroll now. Analysts, a risk manager, a developer who built your custom execution system. You manage over $4 million, but you rarely place the trades yourself. You built the rules, you defined the protocols, and you stepped back. The first month you stopped executing was pure agony. You felt the phantom itch to reach for the mouse and override your team. But you gave it time. You realized that your job isn't to trade anymore. It's to architect the conditions under which alpha is generated. You're running a business now. Your investors are institutions and family offices. They don't ask about pips. They ask about Sharpe ratios and succession plans. Sometimes, late at night, you pull up a chart just to watch it move. Not to analyze, just to remember the raw electricity of when it was just you, a $500 account, and a dream. Then you close the laptop and go home. Level 8, the apex. It's 3 p.m. on a Wednesday, and your office is quiet. You've had one call today. Your team handles the floor. Your systems handle the risk. You manage $22 million in client capital. You don't say that number out loud anymore. It's just infrastructure. It's the engine that pays 7 salaries and keeps the lights on. You understand the market at a level that is impossible to explain. It's not a code to crack. It's a vast, continuous aggregate of human behavior. Your edge isn't knowing the answer. It's knowing exactly where the crowd is wrong, more often than you are. You eat lunch alone by choice. The silence is where you do your best thinking. There is nothing left to prove. The results are in the audited statements. You're in the elevator when your phone buzzes. A junior analyst is asking a question about a textbook pattern with total unearned confidence. You read it and smile. You remember having that exact same certainty 7 years ago. You tight back, guiding him to see the flaw without crushing his spirit. Somewhere, a kid just funded his first $500 account. He thinks it's simple. He's wrong. But he'll learn, and it will cost him exactly what it cost you. And he'll stay anyway. They always do.